Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
Ice raw sugar in New York. I've once again left highlighted in bright red on my daily chart the neckline of the August to November 2021 complex triple top, currently at 24.20. As it was, and still is, part of what I suspected 8 weeks ago might be a new pattern. It is a November 23 to date descending scallop pattern. The bright red neckline plus the congestion between 2390 to 2408, containing the July 2012 high at 2400 and the 50% Fibonacci line of the combined March to November and November to December 2023 moves. All these together are at the moment providing overhead resistances. Going back to the descending scallop pattern, this backward letter J pattern has just about finished its run upwards. You see a target on the upside for the run up was in the 2405 area, and that was achieved 2 weeks ago. It even exceeded a little indeed. The question now is what's next? Well, typically for such a descending scallop pattern there are two pathways. You could expect a hesitation around this 2405 area for a short while before either a drop back down to the December 2023 low, down in a low 20 evens, or after a hesitation, a fresh move higher that will punch up through the November 2023 high, or the highs in the 2814 area. As I said earlier, we are in a hesitation part of the pattern now, and this could be a topping pattern this past 2 weeks or so. Or even if we take it a little wider, a possible bull flag. The only thing I would caution you is to watch out for false breaks in either direction. Europe, white sugar in London. The combination neckline, also the upper trend line, together highlighted in dark blue on my daily chart, currently at 673.10, of both the late May to late August expanding wedge pattern, and for the same period, the reverse head and shoulders pattern is one of the dominant features here today, and I'll shortly deal with that. But first, I would like to set up the scene for nearby supports and resistances. Above this trend line stroke neckline combination, we have the flatlining long moving average currently at 692.30, then congestion at 685.90, followed by congestion and the recent November to December 2023 50% Fibonacci line at 679 even area. Then the March 2012 high at 674.90. The July 2012 high at 663.70 is now below the neckline stroke trendline combination, and also below the bright red August to December 2021 complex head and shoulders top neckline currently at 664.80. That's just below the market is also the declining short medium moving average currently at 657.20. And then we hit the 650 to 652.20 congestion zone containing the 50% Fibonacci line of January to September 2023 move at 652.20. Now there is further congestion below at 635.30 to 638.20, and then stratified supports between 625.30 to 602.70. Okay, so why is the dark blue neckline stroke trend line, why is it important? Well, this all goes back to the late August to early November 2023 double top. Back then, the market broke down through the neckline of this double top with the following potentials below. Primary target X down in the 628.30 zone, the secondary hard reach target X1 down in the 585.10 zone. Now, despite the whole lot of congestion in the previously mentioned stratified band between 625.30 and 602.70, the market managed to achieve the primary and eventually the secondary target. After reaching the secondary target, prices hesitated before pulling back up in late December up until 2 weeks ago when they hit the trend line stroke neckline, but from below. In the process of falling, hesitating and then rising, the market created, just like in New York sugar, a November 2023 to date descending scallop pattern. This hesitation is around the original preliminary target for this pattern, the 670.90 area. The question here is the same for London and New York sugar. What's next? Well, typically for such a descending scallop pattern, there are obviously the two pathways. You could expect a hesitation around the 670.90 area for a short while, before either a drop back down to the December low zone, down in the 585 even zone, or you could see after hesitation a fresh move higher that will punch up through the November 2023 high at 772.90 area. As I said last week, and I quote, we are in the hesitation part of the pattern now. So I would not only caution you to watch out for one thing, but false breaks in either direction. End of quote. All I would add to this now is we seem to be getting ready to exit the hesitation phase, and the drop down just now probably goes towards that. We're getting ready to possibly exit, but it could still be a false break. Just watch out. Sugar white premium spread. It must be close to a year here that this chart continues to be one of the busiest and most colourful of all my charts. Many things are still going on, all at the same time. Okay, so I've previously spoken some while ago now about two big picture items seen here on this weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021, highlighted in dark blue on my weekly chart, with prices currently close to the lower time below, currently at 126.5. Now, I've said this so many times before, and I'll keep repeating it here yet again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle of attack of this market. In the more recent activity, and this is where we have seen prices around and on occasion down through all the moving averages, notably the long moving average currently 130.5 and the medium moving average currently 140 even. And prices had also been pushed down through the two 50% Fibonacci lines at 128.75 and 131.5, as well as the June 2020 high at 134 even, and then moved back up through all of them and up to the 2013 high at 152.75, before ending up where we are, sitting until last week on top of the medium moving averages in a relatively narrow range. However, last week things changed and prices punched down through the medium moving average, as well as the short medium moving average, currently 134.5, and even the June 2020 high. This week already, prices have dropped down and punched through the first of the two 50% Fibonacci lines at 131.5, and even the long moving average coming close to testing the second 50% Fibonacci line at 128.75. And even the dark blue lower time below that. This is an interesting test lower, as it's the first time the market is really trying to push out of a range in which it has become trapped. See, overhead we have congestion between 152.75 to 155 even, and then again between 162.75 to 164.75, and between 163.75 and 175 even. In amongst them is the neckline of the June 2021 to May 2022 reverse head and shoulders bottom, currently 161.5. Now the market could maintain itself between the supports below and the resistances above, though by the end of 2024 the market will have to make a decision as the lower time is still rising. However, last week and now this week has seen an early attempt to break out of this trap zone. The question is whether the market has enough ammunition to punch down through this congested support zone and ultimately break the lower time and the longer term bullish Andrews pitchfork. I'm not sure as yet. You see, we had lower prices in September, October last year, but eventually they turned higher, leaving an island pattern behind. And the lower time was then also lower in the 113 even area, not where we are now, approaching the 130 even area. I will nevertheless be paying close attention to see what happens at the lower time. Just remember this, it requires a minimum of 2 consecutive closes below the lower time to even consider it being broken. And given this market, I imagine it might need a few more consecutive closes to confirm it. I would only point out one thing. Below the dark blue lower tine is another lower tine, so far unhighlighted. But this time it is now from the non-highlighted August 2021 to September 2022 bullish shift pitchfork. It's currently at 115 even.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.